Alright, boys. So, when we're doing the update, the market was midway through its rally. So, let me start that again. Once I get my mic in front of me. So used to having headset on, so I assume I'm on the phone. So yeah, hopefully you can hear me now. The yesterday we were doing this update. We were midway through this rally. Trump has given his speech a little bit before. Market was sitting on the just around here, 10.37. I'd actually sold a little bit of DAX, put a stop here, sold a little bit dollar yen, and put a stop here. And I was just going to see what happens. Not big trades, just small trades. See if the market rolled over. Market did not roll over. We went the opposite direction in terms of total extremely new highs on the day in the Dow. One of the biggest reversals on record. 1,100 points from the bottom to the high. Now that's nuts in its own right? That's just, I mean, look, if I go to a 4 hour, you can see how much this is dwarfing other sort of trading patterns. Sort of stuff that you don't see very often. I mean, wow. Now this is all driven on the back of a different take on what Trump means for the US economy. And so the most common question that I've been getting is, why is it rallying? Well, what's going on? Why is it higher? There's this theme coming through that Trump is going to be this builder of America. So he's going to be doing a lot of construction, and he's going to be focusing on corporate tax code, and also basically a fiscal expansionary sort of policy. Now, yeah, that's true. On that angle alone, you've got a very bullish case. You have the situation where he's cutting corporate tax rates from 30 down to 15%. You have the situation where there's $2 trillion of outside profits from US companies that are waiting to be repatriated. And when they come back, usually they're going to be charged something like a 30% tax rate, and he's dropped that down to 10% tax rate, with a proviso that they spend internally. Now, that's all very aggressive, and all very positive for certain stocks. I mean, construction stocks are up 10%, material stocks are up 10%. Chinese Dalian iron ore futures, which are one of the main futures contracts for iron ore, was up 9% limit this morning. So you do have some positivities out there from the Trump policies. Now, what's the main thing the market's focused on here is that he was, he gave such a different sort of speech after he won compared to anything he's given before, that everyone's like, well, maybe he's going to be this different character when he gets into power. Now that's, hopeful, and we're going to look to that, but there is definitely a huge amount of risks coming up. The main risks are that he talks rhetoric about China being a currency manipulator, and starts to be aggressive in terms of foreign policy. What he the way he deals with countries, right? The way he deals with things in general. Now, it could just be that he's a smart negotiator and he set the platform by starting out ultra aggressive, and then he can come to China and sort of negotiate from that point, rather than the softly approach of, say, the Bahamas and last 8 years, where things are done behind back doors and back channels, and nothing. I don't know. China's been definitely emboldened by the lack of aggression stance on things which are that they've been able to get away with. So look, if he does come out and he does mention stuff like he has mentioned before, he's going to, on day one, instruct the US Treasury to call China a currency manipulator. Now that straight away is ultra negative. Yeah, that brings sanctions and all this sort of effect onto the trade relations and starts basically a trade war. which would be very negative for Asia Pacific, very, very negative for the Australian dollar, and just create this wave of uncertainty about what's he going to do next. Now, I think that he's probably not going to do that. Even though he said he's going to do it, I don't think he's going to do that. That will just be too much market turmoil for him to sort of get away with in the first week of his presidency. But you never know. I mean, perhaps he's just going to do that just to get negotiating, to get some sort of agreement from China about how they're going to manage their currency price. But we have to wait and see. There's all these unknowns that, to me, make it very dangerous to be ultra bullish, even though the market's showing signs that it wants to be ultra bullish. Dollar yen's been very strong. US dollar's been very strong. Those things I was talking about earlier, where we were talking about the US fiscal expansion, the focus on infrastructure, rebuilding roads, bridges, and the military. Those things are all very what they do for the US interest rates, especially the long-term interest rates, is put upward pressure. So you saw the 10-year yield in the US surge above 10%, 2% yesterday, which is a really, really big move. Now that has to, well, it doesn't have to, but it usually does result in a lot of US dollar strength, and we definitely saw that. So that's, if you're asking why US dollar got strong yesterday and why stocks were strong yesterday, I mean, it's basically the same reason those US yields were surging on the back of this new Trump plans. Now, I don't think it's going to last that long, but I was surprised by the move yesterday, so perhaps we do have some legs here. I think what you do have to be doing here is being patient if you are bearish, and you have to wait for the reason. You have to wait for one of these potential 20 or 30 things he could say to spark the negativity to actually be said. Rather than focusing on what should happen and could happen very soon, you wait until it does happen, and then the market, if it's say 2 or 3% higher in the stocks, could start even a bigger level, bigger tumble. So yeah, I mean, just be patient. Be patient if you're bearish. You don't have to chase the market so closely. You don't have to put your view out there and risk your own money for your view, rather than wait until there is reasons and people else to back you up. So yeah, Nick, that's the main reason, mate. The infrastructure stocks went surging, yields went surging, people liked his first speech. Now that can change with one comment on Twitter. He hasn't been commenting on Twitter, although he did change his Twitter username to suggest he is the president-elect. So that's one of the things he changed. I'm sure he's loving it. An egomaniac like that, he's just loving this stuff. But there's definitely some definite risks out there. So while it looks bullish and price actions are very bullish, don't forget that we're one comment away from sharp falls in the stock markets and in risk appetite in general. Very important now, the next thing we're going to be focused on is whether the US is going to raise rates in December. Look, a lot of that will depend upon stock markets. Stocks remain this high, this strong, then you're definitely going to see the Fed raising rates. There's just no reason for them not to. If there's turmoil in the markets, then you may not, right? That's really what you're seeing. Uncertainties, when there's heaps of uncertainty and negativity in the market, the last thing you need is the world's largest central bank to go out there and raise rates. So, I've never seen them do it in the past, and I don't think they'll do it. Not that in my 10 years of trading, I've seen the Fed raise rates much. So, but, obviously, it would be expected, and percentage-wise, it's starting to creep higher, 60-70%. That they're going to raise rates. Dollar yen. Wow. Just relentless. Just quickly going to have to hedge something. Been trying to sell the dollar yen for a while. Now, I'm a dollar yen bull, long term. Just want to see what's going on here with Trump short term. Look, if he comes out and he's a completely different man, then I'm all for buying. I'm all for buying stocks. I'm all for buying dollar yen for 110. Just right now, there's no reason to be involved in that. Another big mover today was on the Kiwi dollar. They cut rates in New Zealand. Now we didn't get filled on that trade. Now, if I left my limit order at 104.50 yesterday when the market was up, I would have got filled. Now that would have been great, but it was dangerous and I wasn't getting up for it, so I'm not going to do it. So luckily they did cut, but it wasn't that clean a trade before they cut. Now they have cut. Aussie Kiwi is definitely grinding higher, looking very strong. Look, the price action on the daily, on the 4 hour. Ooh. I mean, sellers have to be cautious, right? Kiwi dollar, not ultra aggressive. It's just the Aussie dollar's rallying and the Kiwi dollar's not getting involved. Aussie yen, one of the best performers. Aussie's outperforming most pairs as iron ore and commodities are surging and stocks are surging. So Aussie does really well in that environment. So Aussie yen is back on the cards as a buy. It is a little hard to buy when it's so strong relative to where we were 24 hours ago, but it is there was very good reasons to be buying before the whole Trump problems. Very good reasons to be buying in general. You don't want to miss out on a trade just because you're worried about Trump, per se. All right, but the main thing that's changed now is you absolutely have to use stops when you open trades and go to sleep, especially if you're going to sleep during the US session. Buy the rumor, sell the fact stuff. Also, they indicated they're not cutting again anytime soon, but this sort of market was looking to sell into US dollar weakness actually. So this is interesting price action for the Kiwi actually. I like that. I like to see that. That suggests to me that US dollar's got legs against a lot of pairs. The fact that the Kiwi can't rally is telling. Kiwi usually rallies when it has, when there's not overwhelming US dollar strength. But in that scenario, yeah, the Kiwi's just getting smashed. Suggests to me that dollar yen and then the euro's got significant downside as long as Trump keeps his mouth shut. We're going to see that. Alright boys, let's have a look at some of the research out there. Almost every analyst put out a Trump report today. I was actually on TV doing an interview with SBS earlier. Obviously I was suited up, not casual like I am now. Yeah, hedge Bitcoin. I don't think Viper would worry too much if one of the other signals is outperforming him just because they're trading euro. No room for that ego stuff, mate. No room for that ego stuff. I mean, I'm the greatest trader of all time, but I rarely tell you guys that. I wish I was. I'm a much better analyst than I am trader. I've talked about that a few times before. Anytime I'm up 2,000 or down 2,000, I start thinking crazy. Obviously not built for multi-million dollar trading at the moment. I don't know how some of the traders do it. Some of my clients that, I mean, it's not all that they're super rich. I mean, the rich guys do trade better just because they're casual about money, and you have to be casual about your money. But what the super rich guys, sort of like they can follow a trade plan better than most of us. But that doesn't mean that there aren't traders out there who may not have much in their bank, like 50,000, and can, risk 10,000 to make 10,000 quite comfortably. Now that sort of risk appetite is really required to make a lot of money in trading, and it's definitely not the sort of my risk profile. I don't know. At the end of the day, I might become like more of a option seller, something really slow but methodical and constant. All right, so these guys are talking pretty much what we're talking about earlier. Short-term Fed policy impact depends on whether market impact is sustained, so whether there's volatility. All right, Yellen and Trump have had beefs. So Trump has publicly disagreed with Fed policy, and he would likely nominate someone else. Right? That's just the chance, but he doesn't have the power to kick her out, from what I believe. And also, you just let her expire, right? Not that long ago, not that long to go. Now, this is interesting. If they do implement a rules-based approach to policy, that would have dramatic effects. So like the RBA's got the inflation policy, it would have dramatic effects and make it much easier to read the Fed. Let's see what's on the. Well, some very interesting headlines in some of these. What people have been worried about for a while is that inflation in China is going to head out to the rest of the world. So they've got super inflation, right? Not just housing inflation, they've got like, food inflation, everything inflation. Now, what you might see then is just their costs increase, and then they start selling stuff more expensive to the rest of the world. And a good argument's been made that majority reason why we've had such low inflation in the last 20 years is because China's been building everything so cheap. So we start to get inflation around the world. This is also something that's been talked about last night. Why the US dollar is so strong, why yields are so strong, is that all this spending that US might do to build infrastructure might cause inflation. You have this scenario where you could potentially have the first time we've had inflation since the global financial crisis. That would be completely different for central banks, and just chuck spanners in the work for central banks like Australia, which are very much, our central bank and the RBNZ are very, very sensitive to to inflation. So is the ECB. So is the Bank of England. One of the better ways to play the potentiality of a trade war in the next 6 months is with an Aussie option as well. An Aussie put. Aussie dollar will probably be the most heavily sold currency out there on the outbreak of any tensions between the US and China. We have the most to lose. So let alone the US raising rates, being US dollar positive, there's many reasons to be a little bit bearish here. It's just hard when commodities move so quickly higher and stocks move so quickly higher. It's very hard to be bearish on the Aussie just right now, but later I can start to see a much clearer downside for the Australian dollar that I haven't seen for a while. Yeah. A narrowing in spread. So that's the difference between the US and the Australian spreads. You see they're very important for the exchange rate. And if they get dip down, you are going to see the light blue follow. So, I mean, not only if the Fed raises rates in December, but if they indicate they're going to raise a few more times through to 2018, I think it's priced in 4 in the next 2 years, then you would potentially see a much lower Aussie. They've been very slow though with raising rates in the last couple of years, so let's not get ahead of ourselves just because the dot points, the Fed dots, suggest they're going to do that. This is important too. Over the next couple of weeks, we're probably going to start to see who's going to be in Trump's team, his cabinet ministers. Most important, obviously, is not just Treasury Secretary, but Foreign Secretary as well. In terms of impact on Asia Pacific, if he gets rid of the TPP, that's a big blow. If he rewrites NAFTA, the dollar Mexican is just going to go through the roof. And labeling China currency manipulator is hugely negative. China sort of can live without America, right? America can't live without China, which is weird. Now, there is some smart money talking about this theme that we've seen with Brexit. This theme that we're seeing with Brexit and then Trump winning may keep on going. All right, we got French and Dutch elections coming up in 2017. We have the Italian referendum, which is seen as a little bit of a pro-EU, anti-EU sort of vote as well. Now, this is, I never thought Brexit would happen. I never thought Trump would win. Perhaps in crazy land, French, the French National Party, the Marine Le Pen, she wins. And, that would be just extremely negative for the euro. And so we can start to focus on that as it gets closer. I mean, the market obviously will, but that would be, the next big thing in the markets is that French election. If it looks like she's polling well, and she's been polling very well. I haven't checked the latest ones, but some of those polls that I saw a couple months ago, it was 50%. All right, boys. So I'm going to be watching closely, see if this risk rally can continue a couple more days. Obviously, US dollar is still super strong. Hard to fight that. That being said, the 200-day moving average for the dollar yen is not too far away, 106.60, 106.70. once we get to that sort of level, we can start tactically looking at the sell side. If you know, the euro has its own previous lows to break down below, get below that, then we can start targeting 107, 105. Pound's holding its own a little bit. You know, it's doing okay. Aussie's holding its own while stocks are strong too. So it's much more focused on those low yielding pairs, like the euro, like the yen. And you know, while stocks are strong, we can't focus on the Aussie. But still, keep an eye on stocks. If stocks crash or reverse, substantial part of last night's gains, or if Trump says something a little bit more inflammatory, you know, watch which pair to trade. Depending on what he says and what topic it is, then it might be short Aussie to go with the selling of the stock market and just the trade war implications. Alright guys, trade safe, good luck. I'm not going to be here tomorrow. I'm streaming 4 times a week this week. For the rest of the year anyway. And so I'm just having Friday nights off, probably most weeks. But that doesn't mean I won't be in the trade room. So if you need me, just send me a little PM, and I when I log on, which will be some point during the day, I'll try to respond to your questions. All right, trade safe, guys. I'll be back on Monday.